So my next guest loves numbers. Please welcome to the show America's accountant, Dan Geltrude. Thanks for being on, Dan. Look, we're at 4%, or 3.75 to 4, and we've got mortgage rates just over 7%, really, around 7%. If we go to 5 to 7% in that Fed funds rate, what happens to housing? What happens to the mortgages? I mean, oh my word.
Well, if for those people that are not locked into a fixed rate mortgage, they're going to be really feeling some pain because those mortgage interest rates are going to grow, and they're going to grow substantially. But, that's just one piece of it, Scott, because then what happens to the housing market when we start to see interest rates moving that high? Well, you're going to see, a substantial adjustment in sales prices. Then what's going to happen with the markets when we see interest rates growing that way? So, you can't look at any of this information in a silo, because one thing like, okay, we're going to go to 5 to 7% with the Fed. Well, that's going to impact all kinds of things. And to me, none of it is good.
All right. I mean, he also said, or higher. I mean, that's also a little bit of a shudder. But number two, Dan, I mean, maybe I'm just getting old and the world's passing me by, which is probably the case. But how come we're not really harping on the fact that Amazon's laying off 10,000 people going into Christmas? I mean, that has got to be something pretty serious. And then you put that with what, say, the FedEx president had to say about the economy, and then Meta laying off 13% of its workforce, Twitter laying off half of their workforce. Is unemployment like the last shoe to fall here? And if it does, that's going to be ugly.
And here, yes, Scott, it is concerning. And let me back up and just focus 1 second on Amazon, because you kind of said it at the beginning of this segment. Amazon, people think of Amazon, they're like, oh, online retailer, right? Yes. But what are they really? They're a data collection company, right? Amazon knows what everyone is thinking before they even have the thought. Right? They know what they're going to sell you. So based upon the fact of the enormity of data that they have, that they're laying off 10,000 people before Christmas, they know something that the rest of us don't. And then when you look at other big tech, like, Meta, they're also collecting data. Twitter, they're also collecting data. And then FedEx, taking things from point A to point B, all that's pointing in the same direction, that there is trouble ahead economically. So why aren't we paying attention to this? I don't know. But here's what's also strange. With you have these people being laid off, and at the same time, Scott, you got 10 to 11 million job openings.
I know.
What's going on here?
Well, I mean, it's this, we talked about it yesterday. It's just like this data disorder. And then on top of the 10,000 that Amazon announced, they said they're going to continue some layoffs going into 2023. And so you're right. All these big companies that do have all the metrics and the capital to kind of look around the corner and see what's coming down the pike when it comes to the economy. And for them to start doing what they're doing now and then have the stock market not really react. I mean, Dan, it's almost like we're whistling by the graveyard here, and everybody's so excited about a 7.7% CPI, which, by the way, newsflash, everybody, that's really high still. That they think that because we have a trajectory, it looks like the CPI is coming lower. And by the way, we had to have 6 rate hikes to move it 1.5% lower. The world doesn't care anymore. But I think that we've got a really rough 2023 coming. What do you think?
Well, I think so. I mean, look, if you look at what people like Jamie Dimon are saying about next year, right? Because he's not talking about what he hopes is going to happen. He's got the reality glasses on and saying, here's what I think is going to happen based upon all this information. And the information is really pointing towards recession in 2023. I mean, Scott, you got the Fed raising rates. We're still not changing the inflation formula here. So what's going to happen? How high do we have to go? We don't even know that answer yet.
Well, that's where you get these comments like 5, maybe 7, maybe beyond. I mean, that's why he said what he said. That's the Fed president of St. Louis Fed President James Bullard. So, I mean, that to me then says, well, look, we're probably going to have also a global recession. And then I'll go back to my basics, Dan. When you see crude oil come off like it has, or even some of the commodities that we talk about on Market Day Report here all day long, what's the price of anything when your customer's got no cash? That's a problem, right? And that's something that we're going to have to deal with, because if they drive us into a recession, it's 2% inflation or bust. I think they've chosen bust.
I think it's bust all the way, right? So we're gonna raise interest rates to destroy inflation, and by the way, the economy is going to go with it. How about that?
Right. It's like the guy walks out of the hospital room. The doctor walks out of the hospital room and says, "Great news, good news, bad news. Good news is the cancer's gone. The patient is no more cancer. Oh, what's the bad news? Well, the patient's dead." Right? That's the bad news. And that's what it looks like with this economy for me, because that's the path that they've chosen. I'm going to leave it on this. I'm going to hang everybody out there for this. There's going to become a point where it's going to be very difficult to raise rates. And I want to see what kind of moxie, what kind of stones that Jay Powell is going to have when he's going to really start hurting people by sticking to this interest rate hike campaign to get inflation under control, when he sees all these people being tinned out and thrown out on the street from their jobs. That's